Good afternoon, everyone. On behalf of Axis Capital, I welcome you all to the fourth quarter and full year 18 earnings call for Dilip Buildcon. Today we have with us the senior management of Dilip Buildcon, represented by Mr. Devendra Jain, Executive Director and CEO, Mr. Rohan Suryavanshi, Head of Strategy and Planning. Without much ado, I would like to hand over the call to Rohan for his opening remarks, post which we will open the floor for Q&A. Over to you, Rohan.
Thanks a lot, Puneetji. So, first of all, I, along with the whole DBL family, would like to welcome all our investors and partners to this conference call for the quarter ending March 31, 2018. It is my great pleasure and honor to be able to host this call and update all our partners on the important milestones we've achieved this year. But before I do that, let me also first apologize for the postponement of this call, which was supposed to happen yesterday. It got delayed because our board meeting got delayed yesterday because of some unforeseeable circumstances with regards to the consolidation of SPVs. Now, as you are all aware that we've sold all our SPVs to the same group. Now, because of, some selling that has happened, and because there is still, there was difference in terms of how the consolidation was being done. So it just got delayed. So we're extremely apologetic about it, and we understand, such things don't, send the nice message. And we'll make sure that, something like this is not repeated ever else in the future. And as our practice, we will also always keep the call a day later so that, nothing like this ever impacts. Now, there's something else also I want to address right now. There have been certain malicious and false rumors that certain vested interests have been spreading in the market around auditors resigning and all of that. Now, let me clarify that all of that are completely unfounded and baseless. Our auditors are, standing strong, and not only they have, all the balance sheets and P&L, all of those signed, but they're also with us for this year as well. So also let me give you some background on our auditors. Mr. Chitle, who, is the auditor for the company, he sits on the board of Larsen & Toubro. He heads their audit committee. He does audit for a lot of banks as well. He's a very prestigious and respected name on the street. And he was also a past president of the Institute of Chartered Accountants of India. So very, very, highly respected person, and someone whose word is counted with great amount of care. Now, that passed us. Let me, come back to the events of the year. Before I tell you some of that, I'm extremely humbled and grateful to each and every one of you who have, as always, shown, phenomenal amount of trust and confidence on our company, on our business model and our strategy. So this year was one of the most important years for the company for many reasons. Firstly and foremostly, as our focus, as always, will be on execution of projects on hand. This is a strength for which the company is known for. A good way to understand this, or maybe to demonstrate this, is by knowing this, that of the government stated target of 27 kilometers a day of construction, Dilip Buildcon is building over 15% of it on its own. No subcontractors, nothing, all using our own equipment and our own people. So this is a huge milestone for any company to be accounting for that large of the government's total road target. Our second peer set is only one-third our size when it comes to pure execution, a close competitor. Now, since our incorporation in 1987, we've laid more than almost about 18,000 kilometers of roads, with 8,000 plus kilometers of roads having been completed in only last 5 years. Now, this is the maximum that any construction company has built in India. So we're very, very proud of the fact that not only have we built so many kilometers of road, but we've built it in every geography, under every government, under every language and cultural, change. One very important thing that has happened in this year is that very recently our rating was upgraded to A1 plus for short term and AA minus for long term facilities. And we've also got a proposed CP rating of A1+. Another important issue in this year was that our maiden NCD issue of rupees 600 crores was successfully subscribed on a private placement basis with an 8.9% coupon rate, which was the lowest by any infrastructure player in the recent past. Another important event for this year was our tie-up with IBM for the digital transformation to implement SAP HANA, Cloud Service. Now this implementation is complete and we have gone live in last month. This reiterates our belief that we are a process and system-driven company with a high reliance on latest technology, which is what has helped us come this far. So going from Oracle base now to SAP, we are very, very excited how this will make sure that the future growth is now kind of, this has laid the foundation for that. It also gives me immense pleasure to restate the historic and landmark deal that Dilip Buildcon was able to achieve with the Shreyam Group. Now, this was a commitment we had made during the IPO that we will sell our assets, which culminated with this deal. The few things that were very important about this deal was this was the first time that a deal had happened where such a large number of assets had not even started construction. So we were, there were obviously questions around that. People were skeptical, but we've delivered very well on it. In fact, from this deal, 602 crores have already been received in this financial year, and we're expecting about 1,000 crores more to come in FY19. Now to talk about the orders, we won about 14,238 crores of orders this year as compared to 11,303 crores of orders last year. Now this value is excluding GST and is also minus the EP, this is eventually the EPC value that will be coming to the company. So now what this means is about 15% of the NHI's awards are in our kitty. It has been a blockbuster year for us in terms of order intake. So in terms of total orders we've received this year, we've almost doubled ourselves if you look at it a peer-to-peer, apple-to-apple comparison from last year. This year also, as has been historically for the company always, we've also completed 7 projects before time, translating into an early completion bonus of about 88 crores. So, our business model has kept on successfully delivering projects across different states in the same manner. Now, we are also the largest equipment owner in this country with about almost 10,000 vehicles and an employee base of about 32,000 people, which also makes us the largest employer in this industry. This is one of the core reasons why we are able to deliver projects before time. And also, we are able to deliver with kind of profitability that we do. Because we don't subcontract and we do everything on our own and then we end up winning bonuses. So it leads to a higher profitability. This year we were also honored to have appointed Shri Malay Mukherjee as independent director of our company. Shri Malay Mukherjee has various experience and skills in the field of banking and has been a very, very respected name and has worked with sort of many, many very respected companies. Now, with this new addition to the board, we have strengthened our board and also our corporate governance practices, which has also been a constant endeavor for us. Now, the good with some bad, unfortunately, our CFO, Mr. Vaibhav Rawat, resigned due to some personal reasons. We wish him all the best for his future endeavors, and, he had served the company very, very well, and we're very mindful of his immense contribution to the company. In the same breath, let me also tell you that we have appointed Mr. Raja Ghosh, who was earlier General Manager Account and Finance, as the Chief Financial Officer of the company in an interim basis till the company fills the vacancy in the next few months. We are on the search for a CFO, and as soon as that happens, we will inform the markets. Now, coming to our quarterly highlights, one of the most important and memorable events for this quarter was our annual Investor Day and site visit, which we hold for all institutional investors and sell-side analysts. We received an overwhelming response for this event. This was a 2-day event. People traveled to Lucknow to come down to see where we first, on day 1, explained our business processes, our business models, what all we achieved during the year and what all we want to achieve during the next year. And the second day, where we went to one of our sites, Lucknow Sultanpur, which was the biggest project that the company had. And we showcased, all systems and processes that are being used there. And it was a very, very successful event. We were able to clearly showcase, and, all the investors could meet our different teams and see what makes this company tick. So with such positive feedback for this event, we've, like we mentioned in the past as well, we want to host this annually, where we address all our investors and showcase, what all the company has been doing. Now, in this quarter, we also won 19 projects and completed 5 projects before time to receive an early completion bonus of about 63 crores. Now, moving on, let me just recap some of the recent industry updates that have given impetus to the sector. Over the years, the speed of the road construction has become a benchmark for India's infrastructure creation. Now, the present government has set in play a new integrated infrastructure program, which involves building of roads, railways, waterways, and airports. The road industry has not had this good ever. This year, we've seen record inflows, which has been highest ever in the history of NHAI and the Ministry of Road Transport and Highways. Even though our market share has only improved a little bit in terms of total order ones, our value of orders has definitely gone up higher. So this means that the government has been ordering more and more orders. The road sector in India is rapidly scaling new heights with the highest ever project awarding that has happened this year. Almost about 17,000 kilometers of roads were awarded by the ministry and NHAI put together. Of this, projects were awarded in EPC and hybrid mode. In the EPC mode, they awarded about 40% and about 60% were awarded on the hybrid annuity mode. Road construction has also touched almost 10,000 kilometers in FY18 as opposed to 8,200 odd kilometers in FY17. So it shows an execution growth of almost 20%. Now, the momentum has obviously picked up after the announcement of the Bharatmala scheme, and the government is doing all it can in terms of ordering. What's good is that they have a clear 5-year plan of how they want to and what all they want to achieve. The Honorable Minister has guided for about 20,000 kilometers of roads that he wants to award in this financial year. So we are very excited about the opportunity that will come in. Now, coming to our order book. Our order book as of March 31st stands at about 23,881 crores. 92% of our order book is constituted by roads, highways, and projects, and bridges projects. Irrigation and urban development projects contribute about 1% together, and mining projects contribute about 7%. 79% of our projects are awarded by NHAI, 10% by MORTH, 5% by Northern Coalfields, and 3% by Singareni Collieries Limited, and 2% by Government of India undertaking, and only 0.28% by state government and 0.14% by private projects. So to summarize, 99% of our projects are from the central government. And even all the projects that we won this year were all from the central government. This also, because there has always been concern that we are only focusing on our home state. However, that is just a myth that has been propagated far too long. We have absolutely no state government orders left from our home state. We're only doing, even in our home state, we're only doing national government orders. Now there's something very interesting also in our project wins. The ticket size of our projects have increased to almost 1,000 crores. Along with that, our strategy of co-location of projects has also been very successful. So to give example, the Bangalore-Mysore road have about 2 projects, and both of which we were one. So they constitute about 4,500 crores of value. Similarly, Sangli to Solapur road. Out of the 4 packages that were awarded, 3 were won by Dilip Buildcon. Similarly, for all the other roads that we've done in Bellary and everywhere else, we've won projects on co-located. So what has happened are, number one, from 60 to 70 projects that we were doing a few years ago, now we've reduced to less than 30 projects. Even within that 30 projects, more projects are co-located. So it essentially means even lower. So from a management bandwidth perspective, we've gotten better. let me also address a few important queries which I feel have also happened, have been circulated within the market, and I think which is important to address. Now, the company has been enjoying ATI benefit on the development portion of the project that we do. With respect to this deduction of eligible claim of ATI profit, company comes under to term MAT provision under section 115 JB. Now, the tax rate in 115 JB in FY17-18 was 21.34 as compared to the normal tax rate of 34.60. And for meeting this tax liability, company is having sufficient tax credit deducted by the employer. Most of the projects to which company claims ATI benefit got closed in FY18 and get closed in FY18-19. Company will discharge their tax liability in cash after whatever is left after settling the MAT credit. Now, the deduction of ATI to the company has already been confirmed by the Honorable Income Tax Settlement Commission, which is the highest authority, on its order dated 29 September 2016. Now, in the last 5 years, the company has already paid about 310 crores of taxes, out of which we also have 3D certificate of 355 crores. So the net receivable from tax authorities is about 45 crores. Even going further, this financial year, company will be on MAT, will again come on the MAT credits, will come in MAT, as we have a MAT credit of about 400 crores rupees. Now, another question that we've been asked in the past is, what are the intangible assets that the company develops? Now, the intangible asset under development on the consolidated basis last year was about 350 crores. This is coming from the consolidation of Jalpa Devi Tollways Limited. This is one of the SPVs that the company has now sold to Shriram Group. Now, as per Ind AS, the capital work in progress of road will be considered as an intangible in the balance sheet, and the same balance is coming in consolidation. Now, this was 350 crores in last year because half the work was done. Now, in FY18, this figure has increased to 774 point something crores. So once this all deal is completed, this will all go away. Now, the total requirement of new HAM projects the company has won is about, the equity requirement in this project is about 1,218 crores that the company will need over the next 2.5 years when we complete these projects. Along with this, another question that we asked is how much will the capex be? The capex for this financial year is estimated to be around 400 crores. And we expect this to be going forward as well the year after, depending on how in a similar way. Now, let me also give some guidance. Our current order book is obviously very, very robust, and it provides clear visibility for the next 2.5 to 3 years. However, we expect 10 to 12,000 crores of new order inflow this year, at least. We see a healthy growth in revenues this year, and we expect our top line should be around rupees 10,000 crores or so. Our EBITDA margins, as we have guided in the past, will be around 17-18%. Our focus, as it always been, will be to win early completion bonuses, and we expect it to be the similar range of 1.5 to 2% that has happened in the past. Now, let me present the results for the quarter ended 31st March 2018. The total revenue on a standalone basis is about 2562 crores in Q4 FY18, as against 1754 crores during the same period in the last financial year, which means a growth of 46%. Our standalone EBITDA for Q4 has been about 477 crores, which means roughly a margin of 18.6%. Now, our standalone profit before tax stood at about 263 crores in Q4 FY18, as opposed to 190 crores in Q4 FY17, which means a growth of about a little less than 40%. And the standalone profit after tax is about 218 crores compared to 196 crores in as of the same quarter last year, which means a growth of about 11% or so. Now, moving to the result for the full year ended March 31st. The total revenue on the standalone basis is about 7,706 61 crores as against 5,109 crores during the same period in the last financial year, which means a growth of 52%. Now, what this means is this is the largest, we already have the largest EPC base on which we have delivered the largest growth of any EPC company. All of it delivered by DBL. Now, our standalone EBITDA for FY18 has been at about 1,418 crores, which means a margin of about 18.27%. Our standalone profit before tax stood at about 664 crores in FY18 compared to rupees 360 crores in FY17. And finally, our standalone profit after tax for this year was 621 crores as compared to 361 crores, a growth of almost 72% from last financial year. So, as you can see, we've been growing not just well, but very profitably. As on March 31st, 2018, gross debt is about 2,934 crores and net debt is about 2,773 crores. This shows a healthy improvement from Q3. And also when you look at our balance sheet compared to last year's balance sheet or the last 3-year final balance sheet, this has been one of the strongest balance sheets. With all our net working capital days has come below 100 days, which is almost like 97 days now, from last year's of 135 days or so. So not only have we done improvements on the P&L, we have done improvements on the balance sheet as promised, and we've continued to grow profitably along with it, making improvements in each and every sector. Now with this, we open the floor for questions and answers.
Thank you, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from Mittal Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. I just want to know the nature of the transaction you did about impairment. Now, when these assets are being sold at a profit or let's say more than a book value or even at a book value, why the impairment being taken? That's my first question.
So, while the assets have all been sold in total, about 1.05 times book value, there might be some assets where the value was lower than what we had expected. Overall, even though, it's on the higher this thing, net we are in a positive, but some assets might have some losses because of which this impairment has come right now. But when you look at it, the whole picture, consolidated, when it will come down, it will be like we've told you in the past, above book value, all the assets put together.
So actually, I'm using a concept as book value, so we don't need to see the profit. That's why I'm asking, when you have invested 1 rupee, and on that accounting for a losses which your the transaction has happened, and he's implying the value at 1.5 times, despite being losses at the some of the assets, why to put an impairment? Because that asset is any which will get transferred, taking in account all the losses at a book value of 1.5 times of your invested equity.
This is all because of India, sir, that all of this is happening. Unfortunately, because of the new accounting changes, this was how the auditors deemed it fit to be done. Even though the assets are being sold at 1.05 time book value, there was some which provisioning is required as per the India. So unfortunately, we can't do anything about what the accounting standard says.
Okay. So I'll also take the India's, it will be grateful if you can let us know which India's accounting that is. I'll take it later on.
We will get you connected.
Yeah. My second question is, what is the total money you have received from this group as of now? And has anything left over now to be coming next year?
Sir, I answered that at the outset when I said about 602 crores have come in. and about 1,000 crores are expected to come in this year.
So 602 is what from the existing assets which were operational, you have already received that in this year?
The total money that has come in this year has been 602 crores, sir.
Okay.
And this is both for the assets that were already completed, partly from that, partly some money has come for assets which are under construction, because they are also participating during construction with us.
Okay. So when we look at your balance sheet, as you were saying that we have done an improvement, when we look at year on year, despite making the highest ever yearly profit, a cash profit, though that doesn't reflect into a free cash flow because of your higher capex and working capital, the debt has eventually not fallen, despite being the external money which you have received this year. So has there been, because mobilization have been lower, or because of your capex requirement, because of your high working capital requirement, that's the debt to remain at this level? That's my first question. The second thing is, when you look at your equity requirement, which you just stated, a 1,200 crore plus or a 1,300 crores, you will be doing the capex of 400 again next year, plus I think you'll be putting 400, 500 crore of equity, plus your working capital on a top line of 10,000 crores. How do we look at your debt levels? That's my second question.
We want to ask a bunch of questions. I guess let me answer. When you look at, let me first answer the balance sheet question that you put out. Now, free cash flow. The free cash flow question that you're talking about. When you look at the total cash flow that the company generated, it's definitely been among the highest in the industry, the operational cash flow, and even among the free cash flow. The debt, overall, when you look at proportionately how it happened, consolidated, when you look at the debt number has gone higher than last year, but that's because we've also done more than almost 2,600 crores of top line extra. And now the new money that has come through Shrem has also gone into existing projects, the development of the existing projects where they're also developing. So not all the new money would be coming directly to the company's balance sheet, but they've also gone into development of new projects. So that is for that. Now, sorry, your second question was around?
Given
how should we look at the HAM this thing?
HAM, the equity requirement, because if you talk about 10-12,000 crore of order intake, assuming the government focuses only on HAM because of, so you will be incrementally going higher on the equity plus your capex plus your working capital intensity. So how we should look at it?
So the working capital intensity has only been coming down. When you look at the working capital, if you remove the working capital listing from last year's number, the working capital has only increased by about 170 or something odd crores for doing a top line of 2.5 or 2,600 crores of extra. The working capital specifically has only increased by less than 200 crores. There's only 10%. So working capital intensity has only been reducing year on year. So and this will reduce further this year.
Higher debt actually. So your working capital is 10%, but your debt has gone higher. So it eventually.
But that's because we've done capex also, for 400 crores.
Exactly. My point is.
So the capex, sir, when we are increasing top line, how else do you expect to increase the top line if if you want to take equipment and buy equipment? So that is a natural cause of the top line going up. But working capital in the same time has reduced proportionately. So the equipment is being bought from the best manufacturers globally, the Caterpillars, the Volvos, the Ridgins, and the Ashoka Leylands of the world. So that has, even this year when we will do a higher top line, the equipment capex will obviously, as you've indicated, will go up. But the working capital should only proportionately not go up as much, just because of how we become more tightened with the way that we are running things.
Got it. Thank you very much.
Thank you. Next question is from the line of Venkatesh V from Citi. Please go ahead.
Yeah, good evening. My questions are basically all data questions.
Question please पूछेगा क्योंकि वो otherwise एक question एक बार पूछोगे तो it's better, otherwise there's too much to remember.
Yeah, we just want what exactly was your retention money in the standalone balance sheet at the end of the year, and on the asset side, and on the liability side, what was the advances from customers?
Okay, just give me 1 sec. So the retention money is about 412 crores this year. And the second was, you wanted to know what? The
advances from customers. On the liability side.
About 350 crores, sir. 300, yeah.
So here, why is your... See, I think the advances from customers were almost 855 crores at the end of the last year. The advances from customer, you said, is 350 crores, which seems like the advances from customers have declined. Why should that happen when you have a higher backlog?
No, the advances have increased only, sir.
But this number was 854 crores, right? End of FY17. Based on your annual report. Or have I got some numbers wrong?
Let me just check, sir. Sorry. ये कौन सा नंबर बोलो? Advances from clients. So sorry, just give me 1 sec.
Yeah.
As you may understand, because of, all the recent changes, we're trying to manage a lot of things. So just give me 1 sec. Please bear with me.
Yeah.
It's not last year. Last year 855. So you're talking about 850 last year, right?
Yes.
Are you talking number?
Yes, 855 crores. 854.9 crores.
So this year is about 863 crores, sir, in total.
Okay, yeah, that is the number I was asking because you gave me a number of 350 crores.
My bad, sir. Agar number galat gaya, so then this is 863 crores.
Okay, that's it. If I have any other question, I'll come back in the queue. Thanks.
Okay, so sorry about that, sir.
Thank you. Next question is from the line of Srijan Sinha from Future Generali. Please go ahead.
Yeah, thank you, sir, for taking my question. Can you please help me understand your finance cost? So this year, for the full year, the standalone entity shows 464 crore as the finance cost versus your gross debt of about 2,900 crore. So what else does it capture?
So, sir, it captures all the loans that we take, which is the working capital limits, the term loans, all of that is captured in it. It also captures all the charges, all the BGLC charges and all that. Machine, so, like I said, machine term loan, the working capital, the BGLC charges, whatever, processing fees, all those things are included in that.
No, sir. So, BG charges and the processing fee, this would be a minuscule portion of your debt, right?
No, they're also quite large, sir, because, BG also, we have, when we bid for so many projects and all, we also need large non-fund-based facilities.
So can you give me a rough?
If you want the breakup, we can share with you the breakup later.
Right, I wanted the breakup.
We will share with you the breakup.
Is there any other interest-bearing liability?
But this is the same that has been in last, if you look at it historically, also it's been in the same range. There is only slightly increase because there's also increase in the overall debt. So otherwise there is nothing. So this is in the same range. So the breakup as it has been historically, it's almost in the same range. It's just that now with the higher amount of debt which is coming, this has also increased a little bit.
Okay, so is there any other interest-bearing liability sitting on the balance sheet, in terms of mobilization advances or any of these things which are interest-bearing? And what would be the quantum of that?
No, not that I know.
Okay, sir. If you could share the breakup later on, that would be great.
Absolutely. Not a problem, sir.
Yeah, and my second question was, sir, I saw in the BSc notification that your board meeting went on till 3 in the morning. So apart from the financial reserve, was there anything else that you were discussing during the board meeting? Anything that is significant for us to know?
No, there is nothing significant, which is why I addressed it at the start of this conversation when I first addressed all of the people, that this was because of, there was some confusion around the consolidation of the results. The standalone and everything had been done, but the consolidation, there was some confusion because of the whole deal that is happening with the chairman. So, because there's so many changes that have happened in India and everything. So, because of that, it went late. So, it's unfortunate, and I agree it looks weird, but rest assured, there's nothing to be worried about. It was just unfortunate that it happened.
Okay, that is good to know, sir. Thanks a lot for this.
Thank you. Participants who wish to ask questions may press star and 1 at this time. Next question is on the line of Ankush Mahajan from JM Financial. Please go. The next question is from the line of Shubhadeep Mitra from JM Financial. Please go ahead.
Hi. My question was regard to the fact that given that the high amount of inflows that we have seen, and naturally our capex requirement has again gone up, we're also looking at the equity requirement of about 1,200 odd crores for HAM. So how do you, see the funding of the equity into these new HAM projects coming in from? Would it be more from internal accruals? Do you see the overall debt equity numbers now veering more towards a higher debt number?
So the company has very strong internal accruals to meet this equity requirement. Now, this equity requirement is needed over the next 2.5 years, 2 to 2.5 years. Of this, we're also getting about 1,000 crores from the Shrem Group this year. So with that, along with our internal accruals, we're fairly confident that this, we are in good stead for the equity that we need. There is no additional requirement that we have for the debt. For these assets.
Okay.
No equity requirement.
Understood. Secondly, the 1,000 crores that is to come in from Shrem Group, are these milestone-based or any timelines? How exactly can we expect this to come in?
Absolutely. It's milestone-based payment. Let me also say the deal that we have with Shrem is basically it's a zero-sum game. All of the money comes in because if they don't pay the whole amount, they forfeit the right to the assets. Basically, we can buy them out at ₹1 if the deal doesn't materialize. So that is the concept of the deal that we have with Shrem. So they've already paid 600 crores. Now I'm sure you may appreciate the fact that no investor or person would ever want to lose all of their investment. So the money this year it is all milestone based and it will come through most probably by the end of this financial year, given that we meet all the milestones that have been set out.
Understood. Is it possible to share some details on these milestones?
No, not really. We won't be sharing internal details of how it's been structured.
Okay. My last question is with regard to, the working capital. Naturally, we've seen an improvement from the third quarter. And I remember, I think last quarter when we'd spoken, there was some issue with regard to some delay of advance payments from NHI, which probably required some short-term borrowings. So if you can just, throw some more light on how, the working capital situation has improved and, whether the advances payments from NHI, has that improved? How is that working?
No, so the payment with NHI, what you mentioned last time also, because of some GST, the change in law, because of that, the payments that have been stuck. Even right now in our receivables, we have about 300 crores or so of GST money that we need to receive from the government, from the NHI. So with this, if you remove that, our receivables have only gone down proportionately lower. So there is a huge amount of GST claims also that the government has to pay to us.
So this would be true for the entire sector, right? I believe then all...
This should be true for most players. Most players will see that their GST payments are stuck. In our case, just because we do a lot more projects, then the quantum becomes higher, obviously.
Okay, understood. Thank you. That's it from my side.
Thank you, sir.
Thank you. Next question is from the line of Venugopal Garre from Bernstein. Please go ahead.
Hi, Rohan. On the funding side, just wanted to understand that since you won 14,000 crore worth odd HAMs this year and assuming 10 to 12,000 crore odd, I mean, a similar measure the next year and thereafter. So putting that into context, couple of years of string of HAMs, even in that situation, you are confident that you would not have to raise equity, number one, and at the same time not have elevated debt. Basically, you would not be using debt to fund equity for the SPVs. So is that a right way to look at it, or would you want to sort of at some stage, focus less on HAM for a year and then relook at it? So that's my first question.
So very good question, sir. So if you look at DBL, we pride ourselves as an EPC company. Not that we don't like the PPP model or not that we have anything against it, especially the new model. But the thing is, we feel that our core competency lies in EPC, where we've invested a lot in equipment, in manpower, in financial resources, everything we've done that. So for us, it's always a core focus to win EPC orders. Now, when you look at company standalone ROE, ROC, when we sold even this last bunch of assets, it jumped. The ROE and ROC jumped. Now, whenever you will build assets, now if you look at not just us, anyone across the industry, and since you've covered and the industry for a very long time, you know that the ROE and ROC, especially even when you look at the case of L&T, all other peers as well, their ROEs drop. So for us, when we look at this business, we don't feel that we for the parent business, which is our golden goose, where we own 76%, which is also the highest promoter holding, that we need to dilute it by getting more and more assets. So we don't feel that it needs to be diluted, even though this is a good business, maybe in a separate thing, but not for DBL, not as a parent company it should be done. So as we've done in the past, who knows, we're very open to making sure that we can monetize these assets as soon as possible. So that will always be our first and foremost choice, to get these assets off the books of DBL, continue to do the EPC and O&M. Because, the O&M opportunity, the EPC opportunity is good, and the O&M opportunity over a long term provides good revenue visibility for the company. So you'd like to do it like that.
Got it. Rohan, second question is just a clarification again. You mentioned that the impairment you took were because there were certain projects which were sold below the book and INDS forces, that kind of a treatment. So I really haven't tracked it very closely. Apologies for that. But in the entire portfolio of that you're selling to Shrem Group, so since it's a couple of projects, there'll be some projects, of course, at a profit, which is above book, and some below book. So in theory, I thought if everything on an average is above book, you should be having offsetting profits also, or gains. So is that something which is expected this year, gains on certain projects which you're selling?
So, sir, gains to us will be very, very minuscule. But the thing is, if the impairment that you've taken, now this will be reversed next time, in next quarter only. Like I said, because this is an NDS requirement, and we had to do this. But other assets which there will be higher this thing, it will be, reversed in the...
So basically, mathematically, if everything is over book, there should be also gains which you should book.
So like I said,
gains should offset the losses. So that's the right way to look at it?
Yeah, bilkul, absolutely, sir.
But why are you saying gains will be minuscule while...
Because it's been looked at, we've sold it at 1.05 times book value, no? 1.05.
Net of the losses and the gains, so you should have a 15 crore corresponding gain also. So why is that not booked this quarter? Why is that not booked this quarter?
It will happen on different projects have different equity and different milestones, right? हर किसी की equity value भी अलग आई है, हर किसी के there are different milestones as well. Now, as and when we reach those milestones, we will keep getting the money or whatever needs to be booked. उस तरह से booking होके चलेगी.
Okay.
But what's most important is they were concerned see how the money will flow. This year, 600 crores of money has come into the company from the group.
Yeah, that is what you guided earlier. So it's pretty much in line with the guidance, right? So this is what you thought will come. Yeah. So on the tax rates, I didn't understand. So accounting tax rate this year will be what? When you look at accounting, I mean, I know the MAT credits and stuff, but what will be the accounting tax rate?
So it's a 21.3%, 34%. That will be the tax
accounting tax rate for this year.
Yeah.
Okay, and the last thing is, how do you see momentum now in this first quarter in terms of how tendering and order activity is happening?
The momentum has not been as much as we expected. It's been definitely slow, so it might so happen that the momentum picks up later. But orders should come in. We're very confident because this being the last financial year with the government before elections. Orders will come in. The timing of it is yet to be seen.
Okay, and last question, if I may. These advances on hybrids, that will come in next year, right? The HAMs, sorry. The advances in the HAMs will come in only after financial closures and stuff. Is that the way to look at it?
Advances from HAM?
No, so a lot of projects which are in the form of HAM, which are going through financial closures and stuff.
Yeah.
So the reason I'm asking is because if you look at the advance number, in theory, it should have been higher because you've got a larger inflow last year. So I'm assuming a lot of the HAM projects, advances will come next year or the year when you actually start commencing work on it.
Yes, I mean, if you're talking about the mobilization advances and all, then...
Yeah,
mobilization advances. Yeah. So advances will come on the project or when they appoint it, when the appointed date comes in. So, but before appointed date, we already start investing in these projects. We already, deploy our manpower, our equipment, we set up the project camps and all of that. So all those things start even before our appointed date comes.
Sure. Thanks a lot, Rohan.
Okay, absolutely.
Thank you. Next question is on the line of Inderjeet Singh from Macquarie. Please go ahead.
Hi, Rohan. Thanks a lot for the opportunity on the call. Now, my first question is something which Venu was asking. So, if you look at HAM, which is structurally a lower equity IRR compared to what was the probable equity IRRs in the BOT toll project. So, is there a limit that you think is that how much capital you want to kind of eventually deploy into the HAM model, and beyond that, you would not want to do that because exits out of this is going to be potentially at less than one-time equity value or maybe very close to that?
That's a very good question. The thing is, we don't control what model the government is going to give out or their orders in. Like if the government tomorrow decides that this is, they will give out all projects on HAM, I absolutely have no control over it. I can't control the ecosystem that I'm in. All we can do is bid in the most prudent manner and then see how we can, make sure that the profits for the company, the balance sheet, the returns, all those are, done well. Those are our concerns when we look at it, when we look at all these areas. When I mentioned this whole theory about how I look at ROE, ROC, so like, for example, personally, we've heard like, fundraising, there've been a lot of rumors around QIP as well. Now, when we hear QIP, first, when you do a QIP, you reduce the ROE and ROC for all existing shareholders, right? Then what happens? You are investing in assets which already have a lower ROE and ROC than what your current business, your EPC business does. So it would be a negative to do something like that. Like we personally don't feel it is positive. Now this whole fund raising and everything has happened in the past as well when, when we first won this whole batch of new HAMs. That time also there was a lot of rumor around it. So, market rumors, like there have been plenty of rumors that have gone around today. I can't, answer how these start and how they end. Not that, when we have no control over it. But that's how we think about it. It's not that we don't feel raising capital at right time is good and, when markets are good. It's not that, but I don't think, doing...
So, Ron, we understand the point on the fundraising, and given that you're getting funds from your private equity transaction, so we don't need right now. Sorry, but is there a concern within the management that we cannot just keep adding more and more HAM projects because this will just bloat the balance sheet after a point, and after that the exits are not going to be easy on these assets unless we take a kind of haircut because these projects are structured to be low equity IRR kind of projects. So in that way, is there a concern that if too much excessive HAM projects, it might be good for our EPC business, but from a long-term balance sheet point of view, it does not make sense to kind of do that?
So you are absolutely right. Whenever we bid for HAM projects or any con projects, we obviously look at what is the internal, equity available, how can we churn, what we can do. So now we've already demonstrated once a whole churn of 10,000 crore plus of assets that we've already demonstrated, the whole portfolio sold. So this is more than any other player can sort of lay claim to. Now talking about even, that concern about, how the, the balance sheet will bloat and all that, obviously those concerns are obviously there. We've seen what has happened in the last cycle as well. So we're very mindful of what it is, which is because of which we also continuously keep bidding for EPC projects. Now, what projects we win and we lose, we have no control because we are going and bidding in the lowest bidding place. So whatever we end up winning, that comes in. So whether it's EPC or HAM. Now within the HAM, what is good is the fact that at least unlike the last cycle where the revenues were not assured or known, in the annuity model, the revenues are known. And the funding has been very, very benign from that sense in terms of how we personally taken funds for all these projects. Even though we are winning all these projects, let me give you some numbers as well. We won these projects at about 15,000 crores, the last year HAM project that we won. Now for these projects, the government grant is about 6,000 crores. Now the debt we are taking is only 5,000 crores. And the equity is about 1,215 crores or so that we're putting in. So in total, we are completing these projects in lower, almost 20% lower than the government estimates. Unlike the last cycle, where assets were bid at one price and then, the debt and everything was taken higher. Our price of building these assets is almost 20% lower than what we won these assets at. So it's also very prudent from our sense. If you look at our order book, why the order book is, the EPC value has come lower? Because we are building these assets at a cheaper rate. Because our cost of construction is lower. So, we are very confident that we will be able to get these assets off our books soon.
Got it. One last question from my side is, historically, early completion bonus has been a very critical part for our higher level of margins and profitability. Do you think NHAI now giving out projects with typically execution period of around 22 months, does it alter the whole game in a certain way? And likelihood of, or we might have to make much more mobilization and all those kind of things before the appointed date so as to we still are able to complete it projects before time?
So the completion time is, in most cases, 24 months, not 22, just to correct you on that. And then even when you look at historically Dilip Buildcon, we have completed most projects, like if I talk about the annuity projects or any of those, 15 to 18 months we are able to complete our projects in most cases. Even then if it goes to 20 months. Like even if I talk about, the project visit that you guys, that all the analysts had done for Lucknow Sultanpur, when they had visited in March, we had done 40% progress. By May, 60%. Yeah, we've achieved 60% progress already in May. So in 1 year, this project has a 2.5-year construction period, and we've already achieved 60% project progress for a 2,000 crore project. 60% has been achieved in 1 year.
There's no doubt on the capabilities. I'm a little curious that if you have a 30-month period and we completed something in 18 months.
Right.
Would the bonus be much larger than when the...
Bonus anyways has a ceiling. That's a bonus has a ceiling. Bonus anyways doesn't go beyond 5%. So it anyways has a ceiling. So even earlier also, even if I was to do a 2-year project in 1 year, it wouldn't mean that I would get 10% bonus. The bonus is, as long as you're able to do it within that time frame, it should be comfortable.
Good. Thank you. Best of luck.
Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address queries from all participants, you are requested to limit your questions to 2 per participant. Time permitting, you may return to the queue for your follow-up questions. Next question is on the line of Mahavir Jain from Aditya Birla Capital. Please go ahead.
Hello. Hi, Rohan.
Yes.
Sorry, I missed the opening speech. So if I may ask, the inventory levels are quite high. So what comprises of it?
Sir, inventory level for us, the company is actually, when you look at inventory days, it's gone down by a month actually from last year's inventory days. So we have only proportionately become better from where it was last year. So it was about 120 days plus last year, which has come down to almost 94, 95 days right now. So inventory days is only coming down, and this, if you look track on the last 4 years, inventory days has been coming down proportionately every year. So we're only in the process of improving things. Now, also let me just why the inventory days and how it looks. For most player sets, when you look at companies in our sector, they subcontract. When you subcontract, there are 4 things that you won't find on the bench. Number 1, you won't find equipment. So their asset turnover might look at 8-10 times because they're only doing part of the revenue that they are showing. Number 2, they don't have any manpower commensurate to the work that they do. Number 3, they don't need to build inventory because half the work is done by outside, and in most cases, players are not using their own equipment to build inventory. They are buying it from players around that area. And finally, number 4, the working capital requirements. Now, let me give an example. If there is a 2,000 crore top line company, out of which, let's say they've done 1,000 crores of top line on their own and 1,000 crores from outside. Now, their working capital was only used for 1,000 crores, their equipment was only used for their 1,000 crores, their manpower was only used for 1,000 crores, and if inventory, if they built whatever, if the company builds its own inventory, it was only built for 1,000 crores. But when you look at the days, number of days, you compare it with 2,000. When you look at the total revenue, and then you compare all these numbers. So then it looks a little skewed. In our case, we do everything on our own. So our equipment, our manpower, our inventory, working capital, everything goes to do that. So which is why it's just about little higher now if you look at from the rest of the industry. When you look at, when you compare that, it will be a little higher, but not significantly now.
Right. And if I may ask, what all things are included in the inventory?
Sir, there are a bunch of things that are included. There's black metal, which constitutes the largest. See, road is 80 to 90%. 80% is basically mitti and gitti. So, and this is what you need to procure locally. So whenever you've done any site, or you go to any sites across India, if you go for details any of the sites, you will find dumps and dumps of black metal that is there. Along with, so we'll find that. Along with that, we also have, bitumen, LDC, FO, diesel, cement, steel, some of it. But the largest portion will be bitumen, will be black metal and sand. 2 things, because we're also doing a lot of concrete roads. So these things which we need to produce locally, where most players struggle, like you would have heard a lot of problem with in terms of sand procurement and all. Now all of that is produced internally by DBL. We produce sand from the stones. So, we keep accumulating all this inventory to make sure that the projects are executed before time.
Right. So no tools and equipments are a part of, right, inventory, but they are part of fixed assets, right?
Yeah. Yes, sir.
All right. Fine, Ron. Thank you.
Thank you, sir.
Thank you. Next question is from the line of Ashish Agarwal from Principal Mutual Fund. Please go ahead.
Yes, thanks. Just a couple of clarification on this equity requirement of 1,220 crores. This is for the new HAM projects only, right?
Yes, sir, this is for the new HAM projects.
Okay. And secondly, on this impairment, sorry to come back to that, but on this impairment thing, is it fair to assume that the projects which we have already sold under book, the losses have been taken on that, but some of the projects which have been sold above book, maybe the gains on those projects have not been fully taken?
Yes, sir, exactly. That's what I'm saying. It's a timing issue. The projects which, some of the projects where, the losses had to come, they've come right now. And then there is a timing issue. When those projects will come, it will all. Even like I mentioned earlier as well, the next quarter, you will see this reversal of this charge. It's only an India's thing that has happened right now.
Okay, got it. Yeah, thanks a lot.
Absolutely, sir. No problem.
Thank you. Next question is from the line of Siddharth Jain from Morgan Stanley. Please go ahead.
Hello, sir. I wanted to ask you that what is your future projections regarding the debt levels that you had? Do you have any plan to deleverage the balance sheet going forward in FY19 and FY20?
So debt, like you mentioned, proportionately, when we're looking at it, our interest cost as a proportion of our revenues and everything has only been going down. If you look at the last 2-3 years, 4 years, it's only been going down. Now, even this year, our agenda, even though we'll be adding 400 crores of new equipment, so that should be where, some debt will go up. And whatever little working capital we might need, if you look at it proportionally from last year, in that. But we will, it will be, along with that, we'll also have some receivables that will come in from shame and everything. So it should be our debt, when we look at it, our debt equity would be below 1 for sure this year. Another way to think about it. In terms of total volume, it might increase a little bit, but it will be below 1 again. But our top line, again, would have increased quite a bit.
And I also wanted to know that in your balance sheet, in your non-current asset, you have receivables in your account. So can you tell me what constitutes of that receivables?
In our non-current assets?
Yeah.
How much is that, sir?
Up to about, I think, 600 crores.
Just give me 1 sec. So majority of that is MAT. It's 400 crores of MAT, that 413 crores of MAT that I mentioned earlier in this call as well. So that's the MAT credit that we have there.
Okay, so you have booked the MAT credit under receivables, right?
No, sir. This is not under receivables. MAT credit is not under receivables, sir. This is other non-current assets.
Yeah, but under the term of trade receivables, you have booked something under non-current assets.
No, sir. There is some confusion. Under receivables, this won't be there. Receivables, there will be regular payments from the government that needs to come, and then there will be the GST, this thing that we are expecting. Those will be there.
Okay, sir. Thank you.
There is some confusion. If you have some other doubt on it, why we can address it offline.
Yeah, I'll get back to you.
But that is, I'm very sure the receivable doesn't have any MAT credit. Receivable is just, the revenues that we've done and the money that we need to receive. And this is, if you look at it, this is on the asset side. This is on the non-current side. Receivable, in the current assets, this is completely different. So this won't be there. Receivable means only GST receivables and the regular payment that we need to get.
Okay, sir. Thank you.
Thank you. Next question is from the line of Manish Goel from Enam Holdings. Please go ahead.
Yeah, congratulations on excellent numbers, sir. Just to know on the SHRM deal, of the total 1,600 crores, so 600 crores have been received in FY18 and 1,000 crores you mentioned in FY19. So would it be possible to give a number that how much of it would be amount which we would have actually received for the money which we would have invested? Because at the time of the deal, we mentioned 682 crores is something which we have invested in operational projects and under construction. So how much of that 682 crores would have accrued to us out of 600 crores in FY18 and how much can come in FY19?
Okay. Sir, इसके लिए breakup if you want, I can give you some breakup कि इसमें क्या रहा है, कैसा अभी तक का क्या रहा है. So sir, in total about, just give me 1 sec. I'll ask my team that for you. They'll explain to you.
Yes, sir. Out of 600 crores, 160 crores is net out with the investment portion, and 132 crores is being showing in the current liability, other current liabilities, and 132 crores
is showing in
other current liabilities.
Okay.
And 275 crores is, if you see in the balance sheet, there is a separate liability classified as held assets for sale. It's showing as 275 crores. That is the amount. And the rest, 32 crores is directly infused by in the Tuljapur by them. That's how the 602 crores is being received by the DBL.
First item you said 150 crores is what exactly? Sorry, I missed that.
165 crores is net off with the investments.
Okay, so that is why your investments have come down in the balance sheet.
Yes.
Since
the 100% equity could not be transferred in all those 14 projects right now, we are in the process of the getting off the pledge shares, so that the 30% or the so will get done in a few months. Okay. That's where the net off was a little bit lesser and showing in other line item of the balance sheet.
Okay. So where I was coming from is that, say, for next year when you probably are looking to invest in HAM projects, would it be that HAM projects investment would partly get funded with this STRAM money?
Yes, sir. It will be partly funded.
And also, you mentioned that 1,218 crores will be required over next 30 months, but with the pace of your execution when you are completing in 18-20 months, ideally this money would get invested in probably 18-20 months. So, ideally your equity requirement will be much ahead of time.
Yes, sir, but, Abhi, right now, we will be starting these projects only in September, October. So, usse pehle, sara FC or sabka inka appointed date nahi aayega. That is the earliest that we are considering. So, schedule time hai, and typically that we've seen in the past, HAM projects, usually from bidding, they take about 8 to 9 months to start. So, it will, we will almost be at the mid-level or end level of, this financial year when all of this, इसमें जाना और करना शुरू होता है. Some we will obviously be investing early, but उसको आप अगले 2 साल में भी आप मान के चलो, तो फिर from वहाँ से आप लेके from September 18 to September 20.
And last thing on this, with now diesel prices and other input material prices also going up, so are we able to recover, or we have a pass-through clause for most of it, or something which is probably we have to bear?
So all the contracts that we have these pass-through clauses.
Okay. Thank you so much.
Thank you, sir.
Thank you. Next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Hi, Rohan and team. I'll start with my questions. The first one I had was not exactly on the SHRM transition, but wanted to get a sense that while we were thinking of selling the assets that we eventually sold to SHRM, what was the appetite from other investors in buying assets as a bunch? So were there other bids that you would have received for the portfolio at that point of time?
Yes, sir, there were other appetites, or there were other investors also which were interested in buying the assets at that point of time. But this deal was the best in terms of financials and, the timing of the money, which is why, and the surety of everything going through.
So the related question would it be fair to assume that the end game over here, as you add more HAM assets, would be a similar deal, or would you believe that maybe there'll be other means, maybe a bond issuance is in store for us?
Like I've mentioned earlier as well, I think DBL as a parent company, when you're doing EPC, you should continue focusing on that. So we would like to focus on that. Besides that, we are always on the lookout for monetizing these assets. Absolutely.
Got that. So the second question is on working capital. Now, I understand that inventory levels have come down now, but part of the improvement in working capital is also because some stress has been transferred to vendors, which means creditor days have actually gone up.
No, so vendor days are only up by 10 days from last year's financial year.
Okay, got that. So, how much can you improve the working capital more by in the next year because of reduction in inventory and other things?
Sir, Abhi, if you look at the track from the last 3-4 years, the working capital days 4 years ago was almost as high as 180 days or so, which has come down to 95 days right now. So it's a tremendous improvement if you look at where we were 4 years ago. I'm talking about 2015 now. So this is the trajectory on growth. Rather than committing to something, I'm saying instead of giving and assigning a number right now, it is an endeavor that this will come down from where it is right now. Endeavor it is to bring this down furthermore, and which we are fairly confident that we'll be able to do it, as has been the track record.
Sure. Just a data question to end it off. Can you share the receivables which have been pending for more than 6 months as of end of FY18?
Sure, absolutely, sir. We will do that offline for you, for sure.
Got that. And
you want it right now?
I actually would have been interested in that data point, and one which was asked earlier, which was the breakup of interest cost in terms of other borrowing cost and pure interest cost. Thanks.
Okay, so first so if you want that receivable that is pending for more than 6 months would be about 200 crores, somewhere in that range.
And the breakup of the interest cost between pure interest and other borrowing?
That, sir, I will send you later, other borrowing and everything, whatever it is. So it's about, I think, we will send you the whole data point later if you want it in detail, or maybe if you want I can answer this right now. Just give me 1 second.
Sure.
So, sir, about 340 crores in the interest is on the working capital, which is a mix of the CCBD and the LC. And the interest on term loan and, the debenture interest, all those are the rest 122 crores, which totals 462 crores. So 340 on working capital and the rest on term loans and all, and debenture.
Can you share the BG amount, so any non-fund based payment amount separately and fund based separately?
So, sorry, we will share it separately, sir. No problem.
Got that. I'll take it offline. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address queries from all participants, you are requested to limit your questions to 1 per participant. Time permitting, you may return to the queue for your follow-up questions. The next question is from the line of Ashi Anand from Allegro Capital. Please go ahead.
Yes, thank you for the opportunity. Just trying to understand, the potential for us to win a larger amount of orders going forward. What really, is in terms of either balance sheet or execution capability, what do we see preventing us? What is the bigger barrier to growth?
So bigger barrier to growth is, see, there are always limitations that you can do with your balance sheet and whatnot. Given that the promoters only do one business and this is this, and this is one balance sheet. Obviously, there are always limits, which is within those constraints is what we bid for, whether it's for HAM or EPC projects. Besides this, how the government activity awards, those are challenges and constraints, making sure that the money comes on time and all that, which is why what we've tried to do is we've only focused on national government orders where the payments are assured and, there is a set practice and policy in place. That's how we can think about it. Besides that, I don't see any new challenge that has come up right now as opposed to what wasn't there always.
Okay, sure. And just secondly, if you could just quickly, in terms of the whole delay in results, would it be possible to elaborate on what the confusion was with relation to the consolidation, as in what really was the difference in opinions that led to the...
There was no difference in opinion, sir. No, there was no difference in opinion. It's just the whole calculation of it, because this whole deal, now there, if you look at the consolidation, there are certain assets which are no more consolidated, which were there last year, versus, how much money has gone in what asset and how much percentage of those assets have been acquired, given that the different pledges with different banks and everything, some which may have been released, some which may not have been released, approvals from authorities that we've received or we've not received. So because of that, there was a problem along the consolidation of it. Along with it, there was also GST, that has come in regime. So all of those things put together had what was the delay. There was absolutely no confusion around any kind of, there was no dispute on opinion or there was no problems there. It was just a calculation thing.
Okay, great. That's very helpful. Thanks so much.
Thank you. Next question is from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Yeah, hello team. Just a small question, clarification. On the order inflow side, you mentioned about 10-12,000, while you also mentioned about 20,000 kilometer of road inflow coming. So are we talking that our market share will go down this year in terms of order inflow?
Sir, whenever we give out guidance, we are always a bit more conservative to what we might do and not do. And also the company does not want to actually tell how much in total it will win, because it gives out to other competitors how much we're looking and where.
But just for the guidance part of it, it has not much meaning per se.
This is just a guidance that, it will be in line with what our revenues and what we need to do. So this is just a, starting guidance.
Okay. Second, a small clarification on the data point. You mentioned about the 1,000 crore will be coming out from the deal with the... I would want to understand is that when you look at the consolidated debt, there has been about 3,000 crore of debt. If you can give the breakup we know the standalone debt is about 1,000 crore. So 2,000 crore, if you can give the breakup of SPV BOT debt and the HEM debt.
Sorry, sir, I'm not sure I follow your numbers. What numbers are you looking at?
We have 3,000 crore of almost long-term non-current debt in the consolidated balance sheet. Out of that, 1,000 crore is part of the standalone debt. 2,000 crore would be pertaining to our HEM debt, HEM project SPV debt, and the remaining of the BOT debt was also sitting in the box.
Let me. So we had opening last year about 1,680 crores. Let me talk about consolidated debt. So that was the opening. Now the new SPVs added about 900 odd crores of debt there.
Okay.
Now, because some assets were also, sold to Shrem and everything, so it negated about 650 or odd crores of debt that went off from us. So in total, about 1,965 or something of debt is what we have on the for all the assets.
On the BOT.
On the BOT.
So the 1,000 crore will receive, will only left with what, 30-35 crore?
Sorry?
What 1,000 crore what we are yet to receive, that amount we will be paying off to the banks, right, for the debt part?
No, sir, that is equity part. What we are receiving from the Shrem Group is for the equity. They are paying us for the equity, and the debt they are taking over.
Okay, debt they are taking over. Okay, my last thing is that what is the cash payment, income tax cash payment in the cash flow?
21% is that. You're looking at the total amount that we've paid?
Yeah, last year we paid about 83.5 crore.
It must be somewhere in that region. Last 5 years we paid about 300 plus crores of taxes.
Okay, because the 21% would be higher if I calculate the number.
Sorry?
21% if I calculate the cash tax, it would be higher number.
So we'll get back to you if there is something. You can take it offline and they'll explain to you what set-offs and what everything came and how much we paid.
Okay. Thanks a lot.
Thank you. Next question is from the line of Aditi Chandrasekhar from Edelweiss. Please go ahead.
का टेन्योरिटी रहेगा 8 महीने के लिए. Okay.
Next question is from the line of.
जी. So sorry, it is verified.
There seems to be no response from Aditya Chandrasekhar's line, so we'll move to the next question, which is from the line of Varun Agarwal from BOI AXA Mutual Fund. Please go ahead.
Hello, sir. Question is again related to working capital overall and debt level. So just quick check. When you said the debt by equity will remain around 1, so that would be around by end of the year. So in between, because the overall execution will go up and the equity funding may come in tranches. So, it may go up independently during the year or, so that's what I wanted to understand.
It may happen, sir. It may happen during the year because during the year we keep seeing different ebbs and flows. It may happen during the year, but at the end of the year it will be below 1, that equity.
Okay, so that's how overall working capital debt plus overall debt including everything should be around 1. That's
below 1.
I understand, right?
Yeah.
Okay.
Yeah.
The second question on the recent projects which we had around the Q4. So how is the overall land acquisitions and overall financial closure going for larger projects? Just wanted to get a flavor of it. Is there any issues going on land acquisition related to our projects, and how in terms of bank funding, obtaining bank funding from
banks, are we facing any issues? Because a lot of PSU banks are having some issues in funding. So just wanted to get your views.
I think that you're really concerned about this question because you asked me this question in the past as well on the offline, but let me address it again that there is no concern on the land acquisition. The land acquisition for all these projects is going in the same way that, it happens for the EPC projects. The project appointed it only comes when there's 80% land which has been acquired. So we might say, we may say some delay at some project or project. I can't say 100% will always happen on time. Also, when we win projects, we try and see that there is, how we want the revenue to flow and how we want to deploy our equipment. So even we, depending on tightening or loosening is also done internally, depending on how we, what projects and what equipment is free and what projects we will need to start sooner. But overall, I don't foresee any delay in any of these HAM projects. It all just to be prudent. Of all the projects that we're doing, some projects might see some couple of months of delay here and there, but that's about it. There's no major challenge. So along with it, the financial closure is also happening in line. It's happening. We are in advanced stages with various banks for various assets. So that should also happen within the time frame.
Okay, so one last question on the overall, the opportunity coming up in overall, like for example, you mentioned 20,000, 30 kilometer something. So in terms of the model, the way government wants to award the project, is it more on the HAM side or like more on the EPC side? So how is, the next set of projects according to you will pan out?
60-40 would be the ratio, sir.
So 60 in terms of HAM or EPC?
HAM.
60 HAM and 40 EPC, you're saying?
Yeah.
Okay. Thanks a lot for answering my question. All the best.
Bilkul, sir.
Thank you. Next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you and congratulations for good set of numbers. Sir, a few data points. One is, what is the MAT credit number for fourth quarter and for FY18 full that we have booked in the PNL?
Sorry, sir, I couldn't get that.
MAT credit number for 4Q FY18 and for FY18 which we have booked in the PNL.
Just give me 1 second, sir. Sir, there is 413 crores of MAT credit that we have right now. Incremental this year was about 205 crores.
No, sir, what I am saying is in the PNL post EBT, you have a deferred tax of 456 million and provision for current tax is 0 and MAT credit definitely would be a number, so a negative number. So I wanted that negative number for MAT credit which would have set off the current tax number for fourth quarter and the same for the FY18.
Just give me 1 second, my team will explain to you.
Yeah.
So there is no MAT credit set off in this year also because again we are in the book profit regime. So this MAT credit will set off in this FY18-19 because most of our ATIA projects got closed in FY17-18. So we'll utilize this MAT credit in from FY18-19 onwards.
Sorry, I'm not still able to understand because in 9 months, what I recollect is our MAT credit number in the PNL was 826 million, so 83 crores, and the provision for current tax was 95.4 crore. So I wanted the same number for fourth quarter and for FY18 because in the tax, in the PNL, there are 3 line items. One is provision for current tax, one is the MAT credit, and one is the deferred tax. So I wanted all 3 line items. One is already given, deferred tax, so that's what I wanted, only 2 line items.
Okay, sir. I will ask the team to come back to you on that.
Okay, no issues. And secondly, in terms of the capex, in the offsite, we have said that it would be around 300 odd crores for FY19. Now we are raising it to...
Then also. We said 3 to 400 then also. We didn't say 300. We said 3 to 400 then also.
Okay, so...
maybe there's some mistake.
So do I assume that if the top line would be higher than the 10,000 what we are guiding, then this capex number can also be higher for 500 crore?
That's one prudent assumption that can be there, but we are fairly confident that we should be able to do this within this.
Okay, and in terms of the revenue for FY20, we would be maintaining the same 25% growth for revenue, FY20?
Yes, sir. FY20 also, yes, absolutely, sir.
Okay. And in terms of, can you share the cash flow from operations for FY18 number?
Just give me one sec, sir. It's about 360 crores cash flow from operations.
Okay. And all the HAM projects that we have won in the fourth quarter and the first quarter of FY19, we expect the appointed date to be there by at least by end of December 18.
September to December, sir. We expect those timelines.
Okay. And at the same time, when we receive this 1,000 crore from the SRAM group, so that is also based on the assumption that all the 6 HAM projects won in FY17, we would be completing 100% by 31st March 2019, and so all the equity investment that is there in non-current asset would be becoming a zero. Am I right?
Yes, sir. Technically what you're saying. Almost it should be there, yes.
Okay. And once again, just to reiterate, our focus would be to once again go for a sale of the HAM projects, and that's why there will not be a equity dilution in FY19 and also in FY20. Am I right?
So there is a preference for that. Finding a buyer and all that is there. That is our focus area. So there is a preference for that. Now, finding buyers and all that, that's another thing. We are looking and we'll try and see what our strategy is on that.
But if that let's say, assuming if that doesn't happen, then can we go for a equity dilution, or we prefer a higher debt?
No, I don't prefer a higher debt to put as equity, but I'm saying for the current projects and all, we already have plenty of equity to put in. That was what the last deal did for us. It helped us churn our equity. So we were able to, churn that equity and invest it in new projects, coming new projects. And also we'll be making profits from these projects, the early completion bonuses and everything. Then again, if we need to churn it, it will all be there. The company has plenty of very strong cash flows.
Okay. That's it from my side, and all the best. Thank you.
Thank you.
Thank you. Next question is from the line of Rohan Agarwal from Avenir Capital. Please go ahead.
So my question was with regards to the financial closures that are, currently in process for these HAM projects. So there we've seen that, rates have been recently firming up on the last 1 or 2 months. So what is the, tentative guidance that, we can get in terms of the impact on the pricing for the new projects?
So, sir, when we bid for these projects, we actually bid at a higher interest rate internally than what was the market prevailing rates. So even with some hike that has happened, for sure, the G-Sec rates, the bond rates have moved tremendously. But even that, we don't foresee it being a challenge, and it should be in the, still in the single digits and mid, around 925 to 950 or in somewhere in that range is what we're expecting.
That is all in cost?
Yeah, this is the interest cost that I'm talking about, yes.
Okay. And in terms of the current, scenario wherein most of the PSUs have been in the PCA, so any challenges that, we are facing in terms of financial closure for the new projects?
So obviously there are challenges in the banking system with all the capital limits and everything that have been put placed there. But what's very interesting, if you go to any bank and if you ask them what are the top 5 players that you're willing to fund to, our name will always be amongst those guys. The banks will always have the top 3 preference for banks because we have a demonstrated track record of completing all our projects before time. We have a demonstrated track record of doing projects at a lower cost than what was done. And then we have a demonstrated track record of doing all these annuity projects where the revenue came to banks. So when you look at the overall sector and, when you look at the banking sector and when you see what, the lending that they have done, the amount of pain that they've seen versus when you see someone with our kind of execution prowess where we have delivered projects and continue to deliver even large projects before time at a lower cost, with an assured annuity income coming after that. So banks are very willing to lend to someone like us.
Thank you. That's all from my side.
Thank you.
Thank you. Next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So just a clarification, in FY20, you mentioned similar 20-25% kind of growth?
Yes, sir.
Okay. And any comment on the depreciation cost for FY19 would be helpful.
Broadly, it should be in the same range as it has been. So 50 crores or somewhere in that should be the depreciation.
How much? 350
crores or so in that.
So yours, but this year it was about 292 crores, right?
300 crores range. I'm just giving you that, 300 to. Yeah, that should be in that range.
Sure. Thank you very much. That's it from my side.
Thank you, sir.
Thank you. Next question is in the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, good evening, sir. Thanks for taking my question. Just one, was wondering if you could help me reconcile cash flows for the quarter, because as I see it, you would have received almost 400 odd crore rupees of money from Shrem Ventures during the quarter, because December numbers stood around 200 and now you're giving us 600 crore rupees of number. And despite, and over the same period, during the quarter, the debt has gone down by only around 218 odd crore rupees, despite we would have done almost 290 odd crore rupees of cash pay. So 400 plus 290 is as good as 700. Our working capital has improved, but debt has not come down by that much amount. I understand, there will be some capex, there will be some investment, but was it to the extent of 500 odd crore rupees during the quarter?
Sir, the money that will come from Shrem has also gone into investment of the assets. So it has also gone into the equity investment commitment that's needed for those assets. So when you look at it, it is in line with how the debt and everything has come down.
Sure. So how much was the capex during the quarter? How much was the investment that you would have made in these SPVs during the quarter? All the SPVs put together, even outside Shrem?
I don't have the number right on the top of my head right now, but I will get back, my team will get back to you with the exact numbers for the quarter.
And when you write 400 crore rupees of capex for next year, or rather for FY19, does it include the fact that you have 2 new states to look at? One is Odisha. Technically, Karnataka is not a new state for you, but then the size of the scale has gone up substantially. So the number which used to be 400 odd crore rupees till last year, or rather 26 odd crore rupees till last quarter, has suddenly jumped to 4,000 odd crore rupees, which is where you would have to have some more equipment to be able to take care of execution. So when you say 400 crore, would that include incremental investment that you would have to make for Karnataka or Odisha?
Sir, when we look at projects, we look at an overall thing. It's not a state-specific thing that we, invest in equipment. This equipment is transferable from one state to the next. And whenever we finish one project, obviously the equipment moves to the next project. Now, the likelihood of it being in the same state or not being in the same state is outside our control. We obviously always prefer having, projects in co-locating, which is what I mentioned at the earlier part of this call as well. But that's not under our control. So with all these assets, they keep moving from one state to the next. And also different assets, different projects are ending at different times. And similarly, different projects are starting at different times. So it might not be necessarily the project in Karnataka is ending at the same time when I'm starting another new project in Karnataka. So I might be getting equipment from Punjab for that. Okay. So it is all matched with how our equipment is being consumed versus where we need to start projects.
Sure. Thank you.
Yes, sir.
Thank you. Next question is on the line of Chaitanya Mundra from an individual investor. Please go ahead.
Hello. Sir,
yes,
I have one question. You've shown your strong balance sheet and FY18 profits and balance sheet. And why stock price is going down 10 to 12% today?
The answer is I don't have that answer. I'm not a stock market specialist. You guys are better placed to know that. But I've had, what's surprising is that I've had so many rumors that have circulated from auditors saying to whatnot, and so many, theories on whatnot. People questioning what's happening, receivables where and whatnot, what is intangible assets. And which is why we try to address some of those questions, because I think given the community is so small, one person starts a wrong rumor or spreads something, it spreads very quickly. And it spreads like wildfire. So I really don't know why the stock price, even we are surprised and shocked, given that this was such a good, balance sheet has improved so much.
Yes, sir.
The top line has come, so well, which is unheard of in any of the EPC companies. Yes. We've delivered all the projects, and we not only, when we give you all these numbers, and we also identify what projects have been completed and all that. So our disclosures are amongst, if not the highest, I would say the highest in the industry. So I really don't know why this happens, but the good thing is we are still 76% owners of the company, and if there are temporary moments that may happen, one off, I think it's a good buying opportunity for people. If I was below 75%, I would have bought today. Unfortunately, I am not. So and then my models do not allow me to buy more. Otherwise, this is a great buying opportunity. What to do?
This is only a rumor, na, sir?
Yes, sir. So the company which is working in 17 states, completing these many assets, these many roads, and best is, what is the company doing? Best is, why don't you speak to our suppliers? Why don't you speak to our clients? Why don't you go speak to NHI? Why don't you speak to MORTH? How are we doing? Are our projects delayed or are we on time? Are we doing it before time? Speak to our suppliers, whether we make payments on time or not. Speak to the equipment manufacturers, how much equipment we bought. These are all, these things can't be hidden. Okay. But unfortunately, because, none of us really are, human biases. And I think in the recent backdrop of whatever has happened with a couple of other companies, I think that was weighing so heavily on people that people panicked. Everybody wants to be like, "Acha, mujhe nahi pata, but main bhi nahi hona cha raha." So there is also always a lot of fear-mongering that happens, right? Ki, acha, ek do ke saath hua hai, aur bhi ho sakta hai. Stuff like, when people say auditor quitting. Arey, jab balance sheet has been signed and given audited, how can be an auditor quit when it's been signed? But it's a stupid rumor, and I have to issue a clarification. And now both my auditors have also issued statements which we extend to the exchange, which you can go and see in there, on the exchange. So it's honestly, I think, sir, I don't know. Thanks.
Maybe chartered accountant
Mundra, sorry to interrupt. May we request you to return to the queue for your follow-up, please?
Sorry, sir. One last question, sir.
बिल्कुल सर.
मैं भी चार्टर्ड अकाउंटेंट हूँ, लेकिन मैं समझ नहीं पा रहा था कि क्यों स्टॉक प्राइस गिर रहा है, क्योंकि फंडामेंटली आप स्ट्रांग है कंपनी और एक्सीलेंट रिजल्ट शो कर रहे हैं, तो इसके लिए, और मुझे 10% से लॉस हुआ आज, तो इसके लिए मैं
सॉरी सर, हम भी तो 76% से ओनर है, तो इसलिए, और उसको छोड़ दो अभी, उसको तो आप लॉन्ग टर्म होल्डर हो गए, अगर आप वैसे हो तो आई एम श्योर लॉन्ग टर्म यू विल मेक मनी ओनली सर. डेली वाले को आप भी मत देखा करो, सोचा मत करो.
Yes, sir. Thank you, sir. आपने इतना बोला. Thank you, sir.
बिल्कुल सर. Thank you, sir.
Next question is a follow-up from the line of Venkatesh B from Citibank. Please go ahead.
Hello, sir. I had a few follow-up questions. What exactly was your order inflow in the current year?
Well, the order inflow, or orders that we won was about 19,000 crores. Now, this is including of GST, and this is also HAM projects. So the HAM projects also have IDC in there. So the EPC value is what we've indicated, and if you go on, our website, or if you go to the exchange, you will find the EPC value of what we've given out. But
so what is the EPC value?
It's about 14,238 crores.
14,238 crores. Okay.
Of this financial year, like FY18 financial year.
Okay. The second question was, we understand that since you completed the SHREM transaction, what they have given you is around 602 crores. They need to give you another 1,000 crores next year. Now, since you completed the SHREM transaction, in those roads, you were also supposed to put in your own equity of 840 crores. So till date, how much money have you put into those SPVs after the same transaction got completed?
The total amount that needed to be invested in that was about 840 crores. Now this, because Shrem was also coming during construction, part of it was being funded by Shrem and part of it was we were putting. So we put in about, this year we in total what we need to put in all these assets is about 205 crores right now.
No, isn't it like you need to put in 840 crores totally?
840 we need to put in, but Shrem is also committing, sir.
Okay, 840 you need to put in.
74% of that. So the total equity commitment in those, let me reiterate, the total equity commitment in those HAMs was about that much, out of which 74% will come from Shrem. This will be, part of it is equity and part of it will be loan in accordance to the rules and regulations. And then 26% is what we are also putting in.
Okay. Now again, I'm trying to clarify this. Our understanding was you would receive 1,600 crores, 600 crores current year, 1,000 crores next year, right? And you need to put in, Dilip Buildcon needs to put in 840 crores in these projects of equity. So the net inflow which you are getting, cash inflow is 1,600 crores minus 850 crores. Is there any mistake in that understanding?
So did you सारे लोगों के श्रेम पे बहुत सारे क्वेश्चन है तो हम लोग एक पूरा नोट शेयर करते हैं सबके.
Sir, what we do is we'll put out a note because, some more people have this question. But just to clarify, जो पैसा है इसमें, अब जैसे जो ये नए एसेट है उसमें तो पैसा गया ही नहीं दिलीप बिल्डकॉन का अभी तक. ये जीते ही है, इसमें equity infuse होना है. Now this equity that needs to be infused is being infused together by us and Shrem, which is why I was trying to clarify that 76% of that is coming from Shrem, 26% is coming from us. That is.
तो आप ये बोल रहे हो 840 करोड़ जो डालना है इक्विटी, उसमें से 26% आप डालोगे, बाकी 74% श्रेम ग्रुप डालेगा, ऐसे बोल रहे हैं आप?
Absolutely, sir. मैं वही बोल रहा हूँ आपसे.
तो मतलब आपने नेट 16,000 करोड़ आपको मिल रहा है और आपको सिर्फ 76% ऑफ 840 करोड़ डालना है. तो मतलब नेट आपका ऑलमोस्ट 1,400 करोड़ का इनफ्लो है फ्रॉम दिस ट्रांजैक्शन.
ट्रांजैक्शन से 1,600 आ रहा है, कंपनी में उतना नहीं जाएगा क्योंकि जो आप कंपनी में कैसे आता है, अगर कंपनी में आके मैं फिर कंपनी से डलवा रहा हूँ तो ऐसे होता है, वो डायरेक्टली उन एसेट्स में आ जा रहा है पैसा इंस्टेड ऑफ कमिंग इन द कंपनी का दिस थिंग. सो अगर मैं पहले डाल देता हूँ फिर मैं उनसे बोलता कि आप मेरी कंपनी में डालो फिर ये करो, सर्कुलर रुके होता, सो देन दिस इज डायरेक्ट दिस थिंग दैट इज कमिंग इन. और इसके लिए सर आपको समझना है ना, तो देयर इज अ लॉन्ग कॉन कॉल दैट हैज हैपेंड. एक बार आप इफ यू वांट टू गो लुक एट द ट्रांसक्रिप्ट यू विल अंडरस्टैंड इट इन डिटेल. देयर इज अ लॉन्ग we did completely. So this is again the same चीज we're revisiting 1 year down the line when this has all been answered. तो एक बार आप जाके इसको देखो, please devote some time to that. You will understand what is the broad structure. जो आप बोल रहे हो कंपनी में जो आना है वो 700 करोड़ से जो आता है कंपनी के अंदर उतना आना है. ठीक है ना सर, जो कंपनी ने इन्वेस्ट किया था.
ठीक है. एक आखिरी वाला क्वेश्चन था आपका, ये लोन्स एंड एडवांसेस जो है, लोन्स वो आपका कुछ 300 करोड़ से बढ़ गया है शायद. आपका जो स्टैंडअलोन एसेट्स में है, करंट एसेट्स में है, आई थिंक लास्ट ईयर इट वाज 211 करोड़, वो 559 करोड़ हो गया है. तो ये जो 300 करोड़ बढ़ा है वो कहाँ गया है? वो आपके एम प्रोजेक्ट्स में गया है या दिस लोन्स एंड एडवांसेस अभी
जो हमारे सारे अलग अलग एसेट्स जो हमने किए हैं ना उनमें गया है. हैम के अलावा जो बाकी भी हमारे जो प्रोजेक्ट्स थे उन सब में गया है, मतलब जो दूसरे भी जो कंप्लीट होने में चल रहे थे.
नहीं, बट यही क्लैरिफिकेशन चाहिए थी. अगर आपको देखिए जब प्रोजेक्ट होता है उसमें सर्टेन पोर्शन तो हैम प्रोजेक्ट में गवर्नमेंट इज गिविंग यू. You need to put in equity. Remaining loan has to come from bank. Why are you giving loans from your balance sheet to these HAM projects? Is it like a temporary thing that जब तक loan arrange हो आप लोग standalone balance sheet से loan advance कर रहे हो और वो बाद में जब बैंक का loan आ जाएगा आपका repay हो जाएगा, या what is the thought process here?
सर जब आप किसी भी कंपनी हमारी कोई भी एसपीवी में लोन मतलब इक्विटी जाता है ना, इट गोज इन 2 फॉर्मेट्स, इक्विटी एंड लोन. तो वो दो चीजों में जाता है, क्योंकि फ्रॉम अ टैक्सेशन परस्पेक्टिव फ्रॉम और बाद में पैसा उसमें जब आप सेल करते हो उसके जो आते हैं, इट्स अ बेटर स्ट्रक्चर. सो इफ यू वांट टू अंडरस्टैंड इट बेटर, यू शुड स्पीक टू वन ऑफ द एनी ऑफ द बिग फोर अकाउंटेंट्स. टैक्सेशन वाले से पूछ लोगे तो यू विल अंडरस्टैंड इट. सो द लोन इज बेसिकली इक्विटी ओनली व्हिच इज लेबल्ड एज दैट. So it's a accounting process in accounting जिसमें किया जाता है, which is the most tax efficient, which is the best structure to put money in.
Okay. Thank you. All the very best. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Puneet Garg for closing comments. Over to you.
Thank you, Jit. I'd like to thank all the participants for taking time out and joining in for the call. Before we close, I would like to hand over the call to Devenji and Rohan for their closing comments.
Thank you very much, everyone today. I mean, there were a whole bunch of questions, but I hope कि आप लोग के जो doubts है, जो concerns थे, वो they've been addressed. If not at all, please feel free to reach out to my IR team or us personally, and we'll be happy to answer these concerns, because I feel because we're also quite surprised with how the results were, both, the improvement on the, top line, our P&L and all balance sheets. All the improvement that have happened on all those fronts, I'm surprised that, very few people kind of address that, but there were concerns, which seems that there is certain amount of fear-mongering that has been spread, or panic that has been created in the market. So, in case you have any more questions, I understand because of the time constraints कि आपके answers अगर ना हो पाए question, तो आप offline पूछिए और आपके question को देने के लिए company बैठी है ना answer करने, कोई problem नहीं है. Data आपको समझाएंगे if you don't understand or if there is something that needs to be still understood. But let me just end with thank you again for all your questions, and thank you for all your patience and the number of participants who came today. Signing off from the rest of the team, from all of us signing off, and thank you very much. Look forward to seeing you in the next call.